Hi, and welcome back to Ukraine, the dark and light. In this Ukraine war update, Russia's oil price plummets to $36 per barrel. We are now witnessing one of the most significant economic setbacks for Moscow since the early phases of the full-scale invasion, as Russia's flagship Urals crude, loaded from the Black Sea port of Novorossiysk, has crashed to just $36.61 per barrel, the lowest level recorded in nearly 3 years, and a dramatic reflection of how vulnerable the Kremlin's energy-dependent economy has become under escalating Western pressure. This steep decline followed the announcement of new U.S. sanctions targeting Rosneft and Lukoil, Russia's two biggest oil producers and exporters, whose crude shipments are now viewed as high risk by global buyers. The sanctions, set to take effect from Friday, have already triggered a wave of uncertainty, forcing Russia's main customers, China and India, to urgently search for alternative suppliers in order to avoid potential secondary sanctions from Washington, which could jeopardize their access to global markets and financial systems. As these buyers step back, Russia has been pressured into offering increasingly steep discounts on Urals oil, widening the price gap between Urals and the international Brent benchmark to an average of $23.52 per barrel, a level not seen since the chaotic months following the 2022 invasion and the EU's embargo on Russian oil. This widening discount is more than a market fluctuation. It signals deep structural problems for Russia's export strategy, undermining one of the Kremlin's most critical revenue streams at a time when Moscow is trying to sustain a costly and prolonged war. Oil revenue is the foundation of Russia's budget, and the timing could not be worse. October's state revenues have already collapsed by 27% year-on-year due to falling global energy prices, the tightening sanctions regime, and the strengthening ruble, which reduces the value of export earnings. With Urals crude now slipping back toward crisis-level pricing, Russia faces growing constraints on its ability to fund military operations, maintain weapons production, support its troops, and stabilize its broader wartime economy. This sudden price crash not only exposes the fragility of Russia's energy sector under sanctions, but also suggests that the economic pressure on the Kremlin is intensifying at a moment when it can least afford it, potentially shaping the next phase of the war in ways that reach far beyond the battlefield. Thanks for listening to Ukraine, the dark and light. Please like, subscribe, and share.